into one-click trading, and the information is there. So we've got that information posted in several different places. But if you have a particular question, please feel free to send myself an email. You can reach me at chuckc @dtitrader.com or send an email to Jonathan at row, R-O-E-W, excuse me, ROWE @dtitrader.com for particular questions. We'll be more than happy to get that going. All right. So let's go ahead and take a look at the risk disclaimer here if we can, because we are going to talk about markets. And anytime we talk about markets, there's a very high degree of risk involved in trading. You and you alone will be responsible for all the decisions you make. Even if we're telling you something, you need to go ahead and decide if it's the right decision for you, because ultimately, if you make the decision, it's yours. Past performance is not necessarily indicative of future results. And let's see, what else have we got here? I think we got some news. Now, the news is pretty much the same, Tom, it's been for a while. We have Iran. That's the biggest news on the block. It's affecting crude. Crude opened this today's session 86.89, and just taking a quick look, they're a little bit below that open. Not too much though right now. We had core CPI come out this morning, 2.5% on the core number as expected. Pretty much a baseline report. Everything came in as expected. No real challenges there. Got a little pop up in the market, then you got a little pop down in the market. Basically, the news hour was a reason to move, but the news itself was pretty boring. Which boring is good in some markets. So I'm not sure how we read that. Now, Friday, we've got PCE and GDP coming up. We'll see if they're going to be boring as well. Odds are we're going to have a lot of interesting things happening between now and then. We do have rollover at the end of the week, so we want to keep an eye on the premium in these markets. I think the S&P, Tom, is running at a premium of about a little bit over 50 points.
You
Key
talking about,
levels to
is that the June versus March?
June versus March, yes.
And folks, you
So
ought to keep what he's doing there. He's giving you something to watch that premium as we get into Friday. It's a very good early tell about next week. I got some other things to show you once we go to a live market. So stay tuned.
yeah, definitely some interesting things going on there. Now, key levels in the market, 69.11 quarter is still the high of the month. It was the high of the first 3 days. Month open at 68.20 in the S&P futures. Our first 3 day high, or excuse me, first 3 day lows, 67.1875. Obviously, Monday's move down to 65.8450 went below that. You can see that number in red. We're back up in between those first 3 days numbers, though. So we're going to see, what else this market wants to show us. So now we get into the part, Tom, where I'm going to be asking your opinion on this market. And I imagine you're seeing it just as chaotic as everybody else, but you've got a way of making sense out of the chaos. So what are we seeing right now?
Well, I think I said this maybe in my T-Buzz TV, but I know I did in TNT. I thought we got to show patience the first half of the day. The market is in a rally phase right now off those lows, and it corrected, and the correction has held. For example, support, if you go look at the moneymaker I set up in TNT, and that's how I post my morning support, was 67.45, 67.45. So having that number there, and then I use 68.05 as my pivot number and also my resistance up there. So I pretty well define every day in TNT by using those two numbers. Everybody know what I'm talking about there. I'll show it to you if we went to a live market. Remind me to show it to you because I think it would help you, okay? I think that's pretty important.
Yeah, and for those of you looking for that TNT Telegram channel, just go to dtitrader.com/TNT or dtitrader.com/Telegram to get involved.
Yeah, there's three numbers just in the basic vocabulary of the markets. One is pivot, and we do a lot of work with the pivot number, but also resistance and support. You got to know those numbers. Those three numbers get you, that's sort of the playing field you're in. But when I say that 67.45 is support, that means that that's support down in the market, and I don't expect it to break. When it does, it throws out a different thing, okay? And then, of course, 68.05 is the pivot number, which is also the resistance number in the current market.
And John pointing out, POTUS speaking 4:30 p.m. Eastern. So that'll be after the cash market is closed down, but before the futures markets wrap up. POTUS
Yeah, he,
speaking, yeah.
my, you know, Trump's got a habit of putting a time out there. I don't know if anybody ever picked up on the pattern. Usually doesn't start to 15 minutes, sometimes 30 minutes after he posts a time. He's not early.
No, he's not. But you know, with the situation, geopolitical situation that we have in the Middle East right now, you can expect POTUS speaking multiple times during the week. So we're not sure how much of those are really going to be market affecting, though.
Well, let me talk a little bit about crude oil. Uh, I think right now I'm thinking 92.55. If you're short crude oil and just wanting to stay, 92.55 is a good number up there because you got real resistance at 90, and then you've got real good resistance at 90. 92.55 is a key number up there. If you're going to be short crude, just say, hey, I'm short crude. Now, I think we don't know when it's going to break, but it will break. It broke the other day just on I think on a couple words. It went down to 76 was its low. But then you got to look at the monthly open. You got to look at a lot of factors, but it changes over the course of getting there. But I do think it's a good trade to be short crude, especially I look at long term right now, but I will get dialed in when it does break. Okay, and I think it's trading more to the downside than it is the upside after it went to 119.48 overnight. And the midpoint, just to give you an idea of crude itself, the midpoint's 97.22, so we're way below the midpoint of the high and low. So that tells you it's really pretty weak if you look at it from a trader's point. Crude.
Yeah, and if I'm not mistaken, Tom, that midpoint a little bit below the open of the week as well.
Yes. All that's important because what you're trying to do is figure out where the next big trade is. I think the next big trade might be crude, but we got to get there. You get chopped up unless you put a real stop in, and that's from here. That's a pretty big stop from 86 to 92, about $6. I'd just wait, let time tick. It's sort of like as time ticks more, it's going to create more opportunity, a better risk reward scenario. That's on crude. NVIDIA has been a real star of the week. If you look at NVIDIA, it opened today at 186, and it's corrected a little bit from where it's high this morning. But NVIDIA looks to me like it's hanging there pretty good. And like I said the other day, I think NVIDIA, as long as it's above that 174, has made its low. That's what I think. We'll see. And then other stocks have made their lows too. And then I'll point out Oracle. Oracle came out with their earnings and they popped, and they're holding their gains right now. I want to watch that stock for a potential play also. Palantir is corrected after going to 161 down here at 150.52 area. So it's hanging there pretty good. And but in general, my opinion on the day, we just focus on the day, you're better off waiting to get past Genesis today. That's why I brought it up the other day. I said people need to have that. You get the actual numbers that help make you money, and that's great when you get those numbers that can make you money, And I just find that interesting how it's right there in front of you if you look at it. That's a long opinion, isn't it? Okay, we'll keep moving.
Well, I'll tell you what, it's good stuff. And while we've got this time, we're waiting for that Genesis part. We might as well go ahead and talk about a few items here. This is our train and trade session. Welcome in, everybody. We do this every Monday through Friday, starting around 11 a.m. Eastern. We're going to continue doing this throughout the month of March, so make sure you stay tuned. Keep in touch with us. Again, dtitrader.com/telegram. And our YouTube viewers can always join us at this time of day, dtitrader.com/YouTube. Glad to have you guys in today. So let's go ahead and hit through here. Whenever we're talking about train and trade, we're always going to be all trades in train and trade are tracked through T-Buzz Talk and Trade, which is our Telegram channel over there, dtitrader.com/TNT. If you'd like to participate, we certainly welcome any viewers who want to pay attention to what's going on there. So dtitrader.com/TNT. Couple resources that I think you guys need to know about as we move forward. Let's see. There we go. Tom's first book, Winning the Day Trading Game. Got links in here for all these. DTI white paper booklet going into specific topics. Tom's YouTube page. Our YouTube viewers already know where that is. But for those of you joining through Zoom, you can click that link on the slide to join the YouTube page. We certainly encourage you to do so. Important terms to know. Trading is a profession. There is a professional language. So we want to make sure you guys are able to keep up to date on the terms that we may use. A little bit of a dictionary for you there. Tom's penalty tape. This is a presentation that Tom did, unfortunately, a long time ago, Tom. I hate to put it that way, but it was a while back. But basically, talking about how to get back to the basics as a trader. And if ever you find yourself off the beaten path, go and listen to that. It'll help you get a little bit recentered. Optionsplaybook.com is a source we encourage you to use, especially if you're trading options. And then a BNN interview from 2008, where you can see Tom in front of the financial crisis. It was just developing at that point, talking about it on the air, on TV, and you can kind of see the attitude of a trader, which is I'd safe to say, Tom, the attitude of a trader is a little bit different than the attitude of an investor. And, we want to make sure you guys have the tools so that you can have that same attitude. Don't get too caught up in stuff. Be thinking clearly. There's always opportunities in the market. So that being an interview certainly worth listening to. Now, as far as other items, the weekly trade letter, Tom, went out Monday night. Special opportunities, you can see talking about XLU. You're focusing on crude. XLU is a great ETF for looking at the energy sector, if I'm not mistaken, or is it specifically crude?
Yeah, I wanted to point this out to people because this is one of my favorite stocks over the years to acquire during periods like this. But it's a long-term hold. This is money that you just want to grind. But XLU gives you what I would call a diversification in the utility sector, and I think the utility sector over the next 5 years is going to be real hot. And I think you just gotta, every now and then you pick up a little bit of it, and then just plan on holding. It's been great over my career once I discovered it many years ago, and I just like to tell people about it and I made it a special opportunity out of the weekly newsletter. Does anybody own XLU? Let me ask the question. Does anybody own XLU? Just, have it? Kevin does. Good. Carol, good. Good. Yeah, it's just something you put in. Better than a money market fund.
Yeah, utilities have always been a great place to go and collect a little dividend. They're infamously good dividend payers.
Yeah, I think from the peak to the trough, it's, I've seen the 5 year return on this thing over 150%. Now, that's why another reason you get out and then you get back in. It's time to start adding back to this one, I think. That's my opinion. It's a good one.
Seasonality, an important part of
Yep.
trading.
Yep.
All right. And let's see, what else have we got here? Well, that brings us to today's topic. Well, actually, we got a little bit more on the T-Buzz weekly trade letter. I forgot about this, Tom. We need to give people who don't have it. I always think everybody has it, but some people don't. And if you want to access it, you can sign up at dtitrader.com/weekly. $9.99 for a year. Now, this comes out each week, typically on the evening of the first trade date. So that would typically be a Monday afternoon, Monday evening. If we have a Monday holiday, it'll come out Tuesday. So want to make sure you guys have access to that. You get the special opportunities like that XLU we just saw, but also broad market updates, key news items for the week, earnings to watch, Tom's weekly Magic 5 stocks, which you can also get in the Telegram channel. But all that extra information, I think the biggest part of the weekly newsletter, Tom, for me, is the special opportunities.
Yeah, it's just something to put our thoughts together after we see the first day of the week and sharing with you, where you got something to operate on, it's like an executive summary of what we think for the week. It's good. I think it's good. Does everybody? Let me ask y'all. Do y'all enjoy putting this together or reading this every week? I'm just curious. Give me some feedback on it. I priced it at $9.99 a long time ago, and I thought that wouldn't stop anybody that was serious about learning. So anyway, pretty good.
All right. And let's see. Let's go ahead and move over to today's topic in the market, which is seasonality. And I believe at this point, I'm going to see if Jonathan wants to come in and uh, work through the rest of this presentation with you, Tom. But what can you tell us about seasonality here?
Well, I'm a believer in it, and there's four big seasons a year, and you know them very well if you're not even in the market. You got your winter season, you got your spring season, fall, and that's three, right? And then of course you got let's see, summer. Yeah, got my most favorite summer. But anyway, those are the four seasons of the year. The market will change nature depending on which season you're in. Now, a lot of people don't realize that. It's not the same all year long. People, you got to say, what makes up the market? Well, what makes up the market is people. And, a lot of people, personal, I guess, days get in the way of their trading and other things, but months get in the way of it. In Europe, they used to go on vacation. I don't know if they still do in August. That was tied into the Europeans. And it was August was their date. I think that over the years, learning these four seasons really improve your odds to know about it and then know what trends emerge during those seasons. So we're going to cover it today. And I'll let Jonathan pick it up.
All right, so what is seasonality? Excuse me for a second here. A real simple definition. Seasonality is the tendency for stocks or maybe an index or the entire market, talking about S&P 500, to follow price patterns, every year, certain times of year. We're in one of those right now. I know there's a pretty unusual circumstance going on in the world, but we're in one of those seasonally weak times a year where the market tries to find a bottom in February, March, April, that sort of time frame every year. Now, it's already been mentioned that past performance is not indicative of future results, and every year brings new events that are going to affect the market. But that's always an interesting one to track each and every year during the first quarter. And in a moment, I'm going to show you some insights from the Stock Traders Almanac. that revolve around the first quarter, which are pretty interesting as well. But of course, nothing is guaranteed, right, in the markets, but history can show patterns, and patterns tend to repeat because of that human tendency, as Tom said a moment ago. All right. So seasonality can provide us some very, very valuable insights, and that will help us make decisions, trade the markets. So the big seasonal pattern this year is, of course, the midterm election cycle. And Tom just posted my email. Looks like someone asked for that. It's row@dtitrader.com, ROWE. And Chuck, if you wanted to repost yours, I can never remember yours. Yours is a little bit different than it used to be. So it's hard for me to remember at this point. But the big seasonal pattern. What's that, Tom?
The Chuck C at DTI Trader.
Chuck C at DTI Trader. There you go. Chuck's posted. Thanks, Chuck. All right, let's talk about the almanac, some insights from the almanac. And some of these are actually kind of surprising. Since 1913, the Dow has dropped an average of 20%. Now that's an average. It's mixed, between 5% up to 25, 30%. Not the exact numbers, but you get the idea. This is an average from its post-election year high to its subsequent low. Now the actual high in the Dow came this year. So you might take it from the high of this year to get that number. That would be a pretty decent sized drop if they match the average. That would bring us down to about the 40,000 level. I'm not here saying that's going to happen or not, but this is just an almanac insight I thought was interesting. And following a seasonal drop, the market has proven that usually you get a rebound. And since 1914, the Dow has gained an average of 46% from its midterm election year low to the subsequent high in the following pre-election year. That's pretty incredible. I had no idea that was the case, but that was pretty impressive there, Tom. An insight from the almanac.
That is a real good number. And I mean, you look at these trends like that and you say to yourself, okay, everybody's saying, what do I expect? What do I do? Well, there's one you gotta think about.
See what else they had. Now, this is one that's pretty interesting as well, the December low indicator. When the Dow closes below its December low in the first quarter, it is frequently an excellent warning sign. So let me read that again. Take the low from December. During the first quarter, if the Dow closes below the December low, it is an excellent warning sign. And I'm going to show you a chart in a moment and see how we stack up this year. All but two instances since 1952 of the Dow closing below the December low, all but two instances led to additional lows, further declines, with an average of 10 to 11, I guess you can say about 11%. An average decline of 11% when the December low is breached in quarter one. Remember this insight, the data is based on a close below. Good distinction here, because if you look at the current daily chart, that orange line is the December low down at 47,269. Now, we breached it on an intraday basis, but you can see here the lowest close we've had so far was a couple days ago, March 6th, down at 47,480. So technically, there's some technicalities in the data, of course, because it's got to be accumulated somehow in some way. We have not had a single day close below that December low yet. So if you want to, set an alert on your platform, 47,269, do so. And I would say, again, there's things going on in the world this year that don't happen normally. So there's always a chance for exceptions, right? But seasonal tendencies are there to make us aware of what has happened in the past and follow those patterns and then bring those into our analysis. So that's the Dow low. So a couple of good insights from the almanac. There's all types of nuggets like that. from the Stock Traders Almanac, and Tom has brought Jeffrey Hirsch on a couple of times now. We've really enjoyed that.
I was talking to him yesterday.
Yep.
He said that, and he told me the mathematical low was at 5.2%. If you go back and look at that 5% since the rally started in October 22, it's pretty interesting that stat has been hanging in there pretty good too, 5%, you know. So interesting how these numbers tend to play out, isn't it?
Can you repeat that 5% deal?
Yeah, the market's corrected no more than 5% since we made the low in October of 22. If you go back and look at it, it's that 5% is where all the buyers step in. And in this case, it went 5.2%, Jeffrey was telling me. I didn't measure it or do to check the math, but he was talking about it, and he said he thought it was interesting that we started bouncing from there. And I said, me too.
Is that on the Dow?
Yes.
Gotcha. Yeah, very interesting. All right, what else we have? Now, there's a feature inside the roadmap called the data miner that is real good for commodities. And, you know, everybody's just focused in on crude oil right now. So I figured, Tom, we'd look at the data miner for crude oil. And the feature, again, is under charts. I used /CL. And if you're using your roadmap, when you look at this, it takes some time for it to load in. All right, so this is the data miner on crude oil here. What you're looking at, the green line, it's probably a little hard to see because the months are kind of hard to see and the price is kind of hard to see. But the green line is 7 years worth of data, and the red line is 20 years worth of data. All right, so I don't know if Tom wants to say anything about that, but you can see just, you know, everybody can follow the lines in the chart that seasonally, again, not every year has a situation going on like we have this year, but seasonally, crude tends to pull down during March and April, have a rise into the summer months, and then pull down into August, another rise in October. You can follow the lines there. This is called the data miner inside the roadmap. It's under charts. And again, if you open this up, it does take a while. Don't be surprised if you go to charts, you put your ticker in and press enter. It's going to take a while. In fact, it's searching so much data to form the chart. Just don't touch your mouse after you open it and just let it work until it fills in. Is what I would suggest to you. All right, any questions on this? Pretty quiet bunch.
Give a summary, Jonathan, give a summary on that seasonality for crude.
I did a moment ago. I sure did a moment ago.
Repeat it. Just a summary.
All right, everybody focused in. We obviously have things going on in the year that we don't normally have, but from a pure seasonality perspective, you can see from the red line, which is 20 years of data, that crude tends to top out in March, pull back down into April, May lows, rise into the summer months with the June, July high, then make another swing down into August, rise up to September, October, pull down into lows in November for the year, and then it repeats the process all over again. That's the pure seasonal tendencies in crude oil.
What month did it peak out? I can't see it on my screen. What month did it peak out and then come down?
February, March.
Sort of interesting, isn't it?
Yeah, very interesting.
Okay.
All right, so we have more features of the roadmap. This is a good one called DTI code. It's found under scans. And by the way, on the green chart, that line that green line was 7 years. I don't know if you can see the 7-year green line, 20-year red line. That's what those are. All right, the DTI code is under scans. It's a fantastic seasonality. It really is meant for stocks, but you can look at futures as well. Let's look at it. Again, it's under scans. Label it the DTI code if you're using the roadmap on your own. This is the S&P futures. What it does is it pulls 10 years of historical data, all right, to form these month-to-month seasonal trends. And it's looking at percentage changes up or down as you go throughout the months. All right. So this is what this feature shows. Seasonal trends based on a 10 years worth of data. We'll go live in a minute. I'll show you some more capabilities of this feature, but that's going to be your S&P futures right there if you want to take a snapshot of it if you don't have the roadmap.
Any questions about that?
This is 10 years worth of data, Sean. 10 years worth of data. You can see at the top, it says set to 10 years. All right. When we go live, I can show you how to pull in more data than that if you want to. But by default, it's set to 10 years worth of data. So that was the S&P. Let's look at the NASDAQ. There's that NASDAQ. I'll flip it back to the S&P for a moment. Well, I was a little surprised to see over the past 10 years that the NASDAQ March has been a positive month, but it sure has. September is clearly the weakest month of the year over the past 10 years. All right. Following the data, September is the weakest month in the S&P and the NASDAQ over the past 10 years. I'll let you take another snapshot of that if you want. Everybody find this.
Roadmap's been around, Jonathan. Roadmap's been around all these years. We got features in there that just amazing. Some of the features that we've created over the years, and this is sort of, really taking, for me, it's a walk down memory lane when we created them. But now seeing and still apply after all these years, this thing is endless, endless. I'm telling you. I don't know how anybody can trade without it.
Yeah, it really is. Endless amount of features. Queued up a few stocks for us too, Tom. Here's your Palantir. You can learn seasonal tendencies about individual stocks very, very quickly that you probably didn't know. Maybe you follow it extremely closely and you already knew this information, but Palantir has weakness in August and December. Did you know that? I didn't know that, but that's the beauty of the roadmap. You can get that information very, very quickly. Let's see, what's next? Here's Oracle. Oracle clearly has later in the year weakness. So first 6-7 months of the year are quite good, especially that summer months in Oracle seasonally over the past 10 years. There's Apple. All right, so these are just a collection of stocks Tom wanted me to show for you. There's Apple. Here's NVIDIA. There's GLD. I'll show slides again so you can dig in more. And there's SLV. Tom, what you want to talk about? That's the end of the slides.
It's just, I don't know. When I'm looking at the market, I like taking a day like today and really exploring some of the information we have and putting it in perspective. But clearly, you pick your horse you want to ride and ride that horse. We got a NVIDIA trade on, we got a Palantir long-term trade on right now, but it looks to me like we're in the right spot for long-term stuff. You want to go to the live market?
Yeah, definitely. So on the live market here, we're looking, let's change it. Let's show you this. Scans the DTI code. And let's go to NVIDIA. Now, what's really neat about this, first of all, if you want to change the number of years, or actually on the feature itself, again, it's set default to 10 years, but you can look at individual years if you click the drop down. See, the amount of data goes back technically to 2009, even though the default's based on 10 years. You can go back to 2009, as far back as 2009, and look at individual years, all right? So, obviously 2020. There you go. There's 2020. Here's 2022. Very bearish. Here's last year. And if you want to get back to the full data set, just click on set years again and click get year. And it will
Put gold in there. I agree with Paulie. Let's take a look at gold.
Scans DTI code GLD. Showed this on the slides a moment ago for the set 10 years worth of data. Any particular year you want to look at individually?
Let's look at last year.
I'll click 2025 from the drop down, click get year, and there's last year.
Okay.
Now, what's pretty neat about this, if I go back to set years, down here at the bottom, you've got a tab for 10 days, a tab for 20 days, and a tab for 30 days. If I click on the 30 days, it's going to give you a lot of data. And what the feature aims to do is find you seasonal trades, all right, that have worked in the past. So just to keep this as simple as possible here, today is March 11th. If I scroll down here, this says March 12th. Now, this is back 10 years, and the software has found that if you traded it 6 times, or 6 out of the last 10 years, this trade worked, buying it on March 12th and holding it for 30 days. All right. This is GLD. Now, it has an 83% win rate over here. So that means if it won 6 times at 83% success rate, 6 divided by 7 is 83, right? 6 divided by 7 is 85. So it wins 83% of the time. I'm trying to figure out how the math's done here, but this one down here is more clear. March 13th, 6 divided by 7. That says 1/7. Oh, okay, here it is. So over the past 10 years, 6 times it has traded on March 12th. So some of those years would have been holidays or weekends more likely. 5 out of 6 years is 83%. So 5 of the 6 years it traded on March 12th. This trade worked, buying it on March 12th and holding it for 30 days. So a little confusing here about the way it's set up, but March 13th, a 30-day hold. 7 years it traded on March 13th. Historically, over the past 10 years, 6 of those 7 days it worked, buying it on March 13th and holding it for 30 days. So that's what these tabs here aim to do, is find you possible seasonal swings to trade, essentially. Pretty neat, pretty interesting. Again, a feature to put things into your analysis stage. Definitely not anything to look at and say, okay, well, I'm just gonna go buy it on that date. Right? Nothing like that, but just adding to the analysis stage of this. Yeah, pretty cool. So if you want to change the total data set, if we go back to months tab and change the total data set, remember it's set to default years. You can go to setup across the roadmap menu. You can click charts. And I'm sorry, not charts. Go to setup tables. All right, setup tables. And you can see there's a tab here for DTI code. And you can change the number of years. All right. So as long as the stock has 10 years worth of data, it will show you by default 10 years worth of data. If it only had like 6 years, maybe it IPO'd 5-6 years ago, it would only show you obviously 6 years worth of data. But you can, bump this up to 15-20 years if you want, and you would need to restart your roadmap for that to, take place, the data to reset for you. So pretty cool little feature, DTI code. Now Tom's turned around and looked at the market, so let's go look at what's going on here. We got new lows in the S&P, new lows in the Dow.
I guess my advice to say, let's watch the noon was a pretty insightful deal, because it did change, the pattern did change, and we never could get above that pivot number, 6805. A lot better to be on the sidelines watching this and being mixed up in there. But this is, here's what I thought. I'll tell you where I came to that conclusion. I was up early. I was watching Europe just taking it on its ear. Everything I looked at in Europe was headed down. And then I heard a lot of news that came out of the European people, I guess, that run the Europe. And they were talking about raising interest rates, oil shortage, all that stuff. And I said, that's going to carry over into the US, regardless of what the CPI does. And then I said, you ought to wait to Genesis to get a real handle on it. Now the S&P is coming down to my support level, which is 67.45. Remember I said that was my support level. So it's going to be interesting. If Genesis comes down, hits that support level, and we get higher after Genesis, then you're going to see a recovery. That's what I'm looking for. How you like that one? Everybody understand what I'm saying? You let the market just find its balance point, and we know 12 o'clock time, Europe's going to be out of this game. It's going to be all US. Let's just see what happens after 12.
I like that a lot, Tom. Use that Genesis insight to our advantage in your day.
Heck of a feature. Remember we found that jump in that class of, I never noticed it. And that's where we started using it years ago. That's pretty good stuff. Let me ask a question. We try to come up with topics, or we pick up comments from people, and I watch what you say, and we try to hit things that you have interest in. You're here spending your time. And I know it's not costing you anything, but it's costing your time to be here. Okay? Name some things you'd like us to cover in the coming days, because we've covered a lot of great stuff. It's just that I'm trying to figure out, see in the comments, where you want us to go next. So why don't you just type in some things that we can use for subjects in later sessions. This is here for you, okay? And John, you might copy these down. Dividend stocks, okay? Best times to trade futures during the day, okay? Rollover insights, that's a good one.
Got the timely one too. We got rollover next week.
Trade plan for exiting a loss. I guess I got more experience taking losses than most people that's been in this business. So I'll give you my insights. Put that in there. We'll put an insight page in there about losses. Selling premium. I like selling premium. I was doing some premium selling when I missed Jonathan covering a section. Income strategies. Stan, are you in Futures First, Stan? You need to come to Futures First to get all that stuff, trade futures at night. I spent a lot of time in there doing it. Bob would like to know how to pick long-term stocks. Well, Wall Street's got it wrong, okay? Let me tell you how I do long-term stocks. I'll answer that while y'all typing up stuff, okay? Most people go, I'm buying this long-term. I don't. Here's the way it works. I buy it for the day. If it makes it past the day, then I decide, hey, I like it. Then it's for the week, okay? Right? And then for the week, I do the month. So I step it up from the reverse side. Most people that talk about long-term trading don't know how to do it. That's the way you do it. Everybody understand what I'm saying? There's phases. Phase one is the day you get in. Phase two is the week you're in. And phase three, the month you're in. Okay? Wendy, put your number. I'll give you a call. I got to call Sean. I got a couple calls to make today. Okay. Retirement portfolio. We did that before. Yeah, Genesis, as Jim just pointed out very astutely, it could be marking the low of the day. See, people used to tell me when I'd meet in at trade shows and stuff, said, Tom, I can't be consistent because they stayed with the same strategy in the morning and used that same strategy. They made money and then they gave it back in the afternoon. That ever happened to anybody? You made money in the morning, you give it back in the afternoon? Well, that's why you want to learn there's times during the day to evaluate. And to keep it simple, 10 o'clock in the morning, 12 o'clock in the morning, and 2. Those 3 times during the day, you really need to look at the market because that's the times you're going to get a trend change. 10, 12, and 2. That simplifies it for you. You know, I came to that conclusion after about 25 years of trading, so it's pretty good time frame ballpark, 10, 12, and 2. Anybody got anything else? I think we got some topics now to talk about for you. Talked to a customer yesterday. He's really worked hard. I mean, really hard. And he told me that he'll be coming down in April to see me. But he told me, he said, the training he's had has really improved his whole perspective on how to navigate not only the day, the week, the month, but the year.
Looks like there's a question from about pocket puts. If they haven't entered any yet, would you still have pocket puts active?
Okay, let me just tell people this. As long as we're in market turmoil, I don't go home without it. You heard of the American Express ad, I think. Don't go home without it. I don't go home without pocket puts. I like to take profit though when I'm offered. We've had 3 sets already, made some tremendous returns on, but it's sure nice to have it in my pocket when I go to bed. And so I put it on. I like to take it off when they're profitable during the morning. And then by the afternoon, I put them back on with a different date and all that. And I just keep rotating the options. And I think over the history of doing pocket puts, people understand it's a heck of a insight in how to have nice sleep at night. Nobody does that. Y'all ever heard anybody give you a pocket put like we do? I'm just curious. Be thankful. It took me a lot of years to figure out we got to have something when we go to sleep. Pocket put is kryptonite, using a Superman analogy, to overnight risk. Yeah, we're trading down here near the lows on the mini 64. We're still above the 45. Everything pulled back. Jonathan, explain what a pocket put is for me.
Sure. I do you one better. I know we talked about pocket puts as a focus of the day in training trade not too long ago. So,
Okay.
but as what's well, I'll go dig this up. Pocket puts are essentially insurance. Time likes to go out about 30 to 40 days, at least 30 days, I guess the best way to say that. Goes out at least 30 days on the QQQ and going pretty far down in price to find a 5 wide put spread at around 50 cents. So I'll repeat it. Ticker symbol is QQQ. The expiration is out at least 30 days. Finding a 5 wide put spread for 50 cents. So you're going to have to go a little ways out of the money. Depending on volatility, you might have to go a good ways out of the money. And you're buying a higher strike put and selling a lower strike put, of course. That makes it a debit put spread. It would make money as the market falls. And as Tom has said many, many times before, you only want to buy this insurance during times of turmoil, possibility of the market actually falling. You don't want to just buy it to buy it.
Yeah, the strategy is not a good strategy if you got a normal situation. And one of the first clues, the question I would ask, well, how do you know it's market turmoil? You watch VIX futures. VIX futures get above 20. You're in a market turmoil stage. It's very simple to know that. I mean, you wouldn't know it unless you traded like we have for years, but it's really just an insight VIX futures above 20, start thinking pocket puts. Is that simple enough to know, even if you're inexperienced? You can use that the rest of your life. The art of using pocket puts. One other thing I want to emphasize, Jonathan, blow up, can you really make it clear? Well, let's do this. Let's do it this way. Does everybody see RB3 right there? Everybody see RB3? Jonathan, do me a favor, make sure you got good bars. Download your data, download data, and make sure you got it.
All looks pretty good to me. Something going on.
Okay. All right, that's RB3, correct? Notice RB3 had a low. Well, it went both sides of RB3. It went above it and below it. Everybody see that? And then it broke it on that red bar. Go to that red bar next. Okay, that's the red bar. And at a key time, like a reference bar, is where you expect either acceleration or a reversal. We're in Genesis, right? 11:30 to 12, we completed it. What's the high of Genesis on that E-mini?
It is a high of 67.69.
Yeah, see, we're 67.56. So if you break that bar to the downside, your next stop will be 45. If you break it to the upside, your next stop will be probably 67.85. Okay, so and I picked that out because you got to go look at RB3 to figure it out. Because if you look at RB3, about the midpoint of RB3 is about 85, I think. Okay, so the market works very logically if you know where to look at it and do the calculation. I hope everybody picked up what I just said, because it's so, you're walking the market trying to figure out if you're going to put any money out there. And this is a good way to do it. I hope everybody got that point. Well, that's all I got.
Yeah, it's going to be an interesting afternoon unfold here. Michael says, you make it sound so simple and logical. Thank you.
Thanks, Michael. But you got to understand, I've been doing this for a long time. I just go to the executive summary, okay? In other words, I'm giving you something that you can walk away with or spend your time with me, okay? Steve, that depends on the market. He's asking how long do you hold a pocket put? Depends on the market. You got an all or nothing bet. Usually when the market or the VIX makes a decided reversals, I'm ready to get out of it. Speaking of the VIX, it's right at 25 right now. Okay, I hope this helped everybody. If you got any questions, send the questions to Roe@DTI Trader. We're just trying to show you there's a better way to approach the stock market without all that emotional turmoil that most people are doing. That's why last week before this war started, I said the odds favor him striking this weekend. And I said, circle your wagons is a term I use. And I said, hold gold and silver. That's been quite a move. Anyway, Jonathan, that's all I got.
Thank you, Tom. I got a video from Adam on Orion alerts that I can queue up, and we'll listen to
Yeah,
that.
and speaking of Orion, if you get signed up for it, Jonathan, I want to do a master class because this is one of the most recent automatic analysis programs that we put together. And I want to do a master class to make sure the subscribers to Orion are able to take advantage of how good it is. Okay. So let's play it and let people see it.
Sounds good. Thank you, Tom, and I'll see you at 1:30.
I'll be there. Live trading.